Hello everyone and welcome to today's special update, how to use known unknowns to determine price targets for February 11, I believe it is, and not the 10th. And let's go ahead and see how we can determine price targets without knowing anything, though we know anything. All right, sounds confusing. Well, ask one of our old famous politicians on how to use known unknowns and all that stuff. So let's go back here in time a little bit and assess where we think Bitcoin is. We assume and think, this is critical, that the 2017 high was cycle 1, 2018 low was cycle 2, the current high is cycle 3, we're now in cycle 4, to be followed by cycle 5. Now we know cycle 2 was a zigzag. This is a zigzag pattern. We have A, B, C's, not a flat. I'll show you in a minute why. And based on Elliott wave, which has the rule of alternation, when wave 2 is a zigzag, wave 4 will 9 out of 10 times be not a zigzag. In this case, most likely a triangle or a flat. This whole assessment is off the table if and when we drop below the 2017 high, because we know fourth waves are not allowed to overlap with the high of the first wave in a standard impulse pattern as shown. So you can go to my website, click on menu, click on education and Elliott wave principle. If you don't do this, you don't read this, that's on you. We need to get a little bit better and know a little bit more every single day. And I highly encourage you to read this. This is here for your benefit. This is here for your learnings. This is here to improve. I can't help more than this. If you still need help, contact me. We can set up consultation calls and all those things. And I've learned some really interesting things during those calls. It are mostly people that are smart that have the consultation calls. Anyway, here we are. So we have a lot of different patterns the market has to follow. That's a limited set of patterns essentially. Corrective waves can be a little bit more extensive, but there's a limited set of patterns the market has to follow. So we know those. We know those limited sets. That's it. That's all there is to it. We have an impulse, 1, 2, 3, 4, 5, where wave 1 and wave 4 cannot overlap, as shown here, right? Wave 1 and 4 cannot overlap. We have ending diagonals or leading diagonals where wave 1, 2, 3, 4, and 5 kind of all overlap. It's fine. That pattern happens as well. And then we have corrective patterns. We have what we call zigzags, we have flats, and we have triangles. Now they come in a lot of different flavors. Flats come in a lot of different flavors. Zigzags come in about 2 to 3 different flavors at the most. Most of the time a double zigzag is as much as we can go by. Flats come in about 6 different flavors. Triangles come in about, this is a symmetrical, we have ascending, descending, and then we have 3 of each, which makes that about 9 different triangles. So we have 9 different triangles, 6 different flats, that's already 15, and about 2 to 3 different zigzags. So we have a limited set of corrections. Now, the market can always add a zigzag to a flat, all that stuff, but that is very, very, very rare. So we'll just go by that. So we have less than 20 different patterns to look for in a correction. So when a correction starts, nobody knows what's going to be. But we can make very logical assumptions, knowing that the first correction was a zigzag. Then we know that we should not see a zigzag for the wave 4. Right? The wave 2 was a zigzag, then wave 4 is not a zigzag. Of course, with the understanding that this is a wave 4 until proven otherwise. So then we can already narrow it down. We can discard the zigzags. Fourth waves are really often triangles and flats, but they differ in pattern. Flats always have it's hard to see here, 3 waves down for wave A, 3 waves back up for wave B, because B waves are always 3 waves, nothing else, always 3 waves. And then 5 waves down for wave C. C waves are 9 out of 10 times 5 waves. Why do we say 9 out of 10 times? Because the other times they're kind of like ending diagonals, and ending diagonals technically have 5, but I have seen ending diagonals that are like 3. I cannot really discern between the two of them. If you see enough price data, you know ending diagonals, and diagonals in general are very messy. So that's why I say 9 out of 10 times. Okay, so these are the patterns we're going to look for. Now, my assumption is this is going to be a flat. Okay, we're in a large flat correction. And so we have our known unknowns. These are the unknowns, but we know them, right? We don't know yet which of these paths the market is going to take, triangle or flat. And of those triangles, we don't know which triangle it's going to pick or which flat it's going to pick. So you say, well, what use is that? It's insane useful because we now know one of these paths is going to be taken. And eventually we get it right. So we already know more than 9 of 10 people because most people don't know that these patterns even exist. Well, shame on them because it's out there and you should know it. You should, it's right there. So here we go. This is a blank sheet of the correction that started in November of Bitcoin. I'm going to focus on Bitcoin because I can't cover everything in the time that's allocated for this, which is about half an hour. And we have a blank sheet for this correction. Okay. Why do I think this correction is over? First and foremost, because this is the largest rally that we've had since the top. That already strongly suggests that this correction is over and it's not part of this correction anymore. There are a few other indicators that help as well. During this whole correction here that started in November, you can see the RSI 5 just barely made it over 70 once. Everything else is always kind of below 50. Here we are well above 50. So that's a change of character. Look at the MACD. Since we topped, the MACD has been held by this, as I showed before, downtrend line and made lower lows, of lower highs. Now we're making a higher high. Also suggests a change in trend. Look at the money flow, right? The money flow ever since the all-time high has been very subdued, didn't make it over 80. Now it is over 80. Everybody has bought, so yes, we're going to see the pullback. So that is all additional information to tell us this initiation wave is lower. Good, that we now know. Second, how long did this initiation wave last? A couple of months. So we completed a cycle 3 wave, right? That is the underlying assumption. Cycle 3. We'll know eventually if it's not correct, but so far that is my preferred view. Cycle 3 completed. And this is how long cycle 3 lasted, from top to bottom, from early November into late January. So that's 1 month, 2 months, 2.5 months. Okie dokie. That is good. I'm going to label it as primary A. Why? Because primary waves last a couple of months. Primary 1 lasted a couple of months. Here, as you can see here, that's about 1, 2, 3, 4, 5. Excellent. Primary 5 in 2017 lasted 3 months. Primary 5 here lasted 1, 2, 3, 4 months. So anything that lasts several months is most likely of a primary degree. So then this is primary A. Now, if anything is of a primary degree, it should last a month or so at the minimum, right? So we should be looking for a month. Is that something we've seen before? Yes, we've seen bounces that last a month, 1 month, 1 month, 1 month, right? It should be at the minimum a month in time. Excellent. So then we have wave A here at this low, and wave B should then be something similar time frame. Can it last as long as wave A? Yes, it can, but most likely not. If it's a counter trend move, the counter trend move is not going to be as long in price, most likely, and not as long in time. So anywhere between now and early April, we should expect this bounce to complete. Now let's do just the middle. This is the middle so far, okay? And then we divide it up once again. As you can see here, we've just done, this is about 1.5 weeks plus another week, 2.5 weeks. Feels a little short, huh? We just assessed that primary waves should be longer than a few days to weeks. So this already suggests us this primary wave is not complete. Okay, knowing that, we know this primary B wave should last a little bit longer. And we also have to have it subdivided, meaning we need to see 3 larger waves up. Every single wave that is a B wave, A, B, C, is a subdividing 3 waves, always. Okay, now let's then assume or count the correction that we've had so far and see if we can label it nicely. This actually should be 3, by the way, something like this. Actually, this is, I think, 1, and this is 2, something like that, and this is, I believe, 3, and this is 4. That is fine, something like this. It should be okay. So the label is a little off there. It's fine. Regardless, we're going to look for something that's going to last a little bit longer than we've seen now. Also, because this money flow is quite bullish, everybody's bought, so some selling should be expected before we move higher again. Okay, so the primary wave, A, looks to have subdivided into 3 smaller waves, A, B, and C, of the major degree. How do I know that? Well, quite simple. I'm just going to look here at the price. This is essentially the largest drop we've had since the all-time high. And this is the largest bounce we've had since the all-time high. Okay. We can simply look at it. Okay, I'm just going to look back in time. This was as much bounce as we got. Did we get any other bounce of this similar degree? No, not at all. Excellent. Then this is, in my humble opinion, wave B. Wave B here, it's 3 waves. So wave B is then, of course, corrective, meaning wave B can be a zigzag, wave B can be a flat, and wave B can be a triangle. In this case, wave B was loud and clear a zigzag. We had the rally here, the oversold rally. We then had a drop again for wave B, retracing almost all of this wave A, and then we went back to where wave A ended. That is a classic flat. So you can see how tricky B waves are. So you have a flat within the correction. This is A, this is B, and this is C. We also know that C and A waves have nice Fibonacci relationships with each other. Now let's have a look here. And I'm actually going to change the color of this one here to blue, so we have a nice similar color. Okay, there. And what we can see here is that wave C was exactly, I'm going to actually change it around for you so you can see it even better. Let me see here, there. So this is wave A. And then we go to the bottom here to this larger wave A. Oh, sorry, I had it correct. My bad. Sorry, I had it correct. Sorry for the confusion. Let's have a look here. So this is the length of wave A, 100%, right? You can see it, 100%. So then we're going to start off at the top of wave B and see where wave C ended. Okay, let's have a look. That looks really nice. So there, this is where wave C ended. And that is exactly 76.4% times the length of wave A. Okay, this is 0.764 times the length of wave A. Again, I can simply move this around. There we go. And you will see this pattern absolutely materialize. There you go, because we bottomed at 23.6, which is the reverse of 76.4 if you subtract it from 1. Normally, C waves are equal to the length of wave A, but they don't have to. Okay, but you can see here we had a picture-perfect 0.764 Fibonacci relationship. Excellent. Okay, now did this C wave subdivide into 5 waves? Let's have a look. As usual, I'm counting corrective waves in this case as up days and the impulses as to the downside as the 1s and the 3s. So if 1, we have an up day here, that is 2. And then we have, of course, 3 here. We have another couple of updates in a row here for this complex wave 4. Boom. And then you can see this actually should be in red, not in green. Got to keep the same labeling. 1, 2, sorry about that. Making sure all the labels are correct. 3, okay. 4, and then 5. So we got 5 waves down for wave C, which was equal to 0.764 times length. Excellent. So now we know we have 3 waves lower. Okay, 3 waves lower means we are dealing with either a triangle, which is 3, 3, 3, or a zigzag. Okay, a flat, not a zigzag, not a zigzag, because a zigzag is a 5, 3. This is a 5, 3, 5 correction. And this is clearly 3 waves lower. Black A, black B, and black C. All right, so we have 3 waves lower. A is 3 waves. Loud and clear. So it must become a triangle or a flat. Now that fits with the notion I already showed you here. We have A, B, C, right? A flat. So this supports the notion of a larger flat. Okay, so how do flats develop? Flats should, as we know from the patterns, do something similar, A, B, C. This is the basic flat. So instead of 1 and 2, we read it as 3 and 4, cycle 3, cycle 4. It's the same deal, understood? Right? Oh, that's the finalized version where I can cheat. So wave B should go all the way somewhere up here, about 80, 90% retrace. Okay, so we got some time. So how is this wave B then going to develop? We've just determined wave A is 3 waves lower. Excellent. That means we get at the minimum 3 waves back up, right? Because this could, of course, also all be of cycle 4. Now, why is this then not all of cycle 4? Because similarly to the length of the current drop being a few months, similarly as the rally from the summer into the fall was several months, we also know that cycle waves last about a year, 2017 into late 2018. Okay, primary waves last a couple of months. That is the whole idea here, right? A couple of months from like that, whereas cycle waves tend to last longer because they're higher degree. Good. Then we know that the current leg is not, most likely, not all of cycle 4. It's too short. It should be indeed wave A. All right, still hanging along? I hope so. I really hope so. Wave B is going to be 3 waves. We always have 3 waves in a B wave. We must have 3 waves. How are these 3 waves going to develop? A, B, and C. And of course, we know the relationships between A and C waves and the relationship of B and A waves. Now the A wave, and since this is of course a correction, the B wave can become a triangle or a flat. Depends. So if this A wave is 5 waves up, then B wave becomes a zigzag. Remember, zigzags are 5, 3, 5 patterns. Flats are 3. B wave is, we already know that, 3 waves. Also 3 waves. And we have them A, B, and C. So let's have a look. We're simply, again, going to look at down days to determine where we are in this A wave. Okay. So far we have 1 here. This is how I counted. 2. Okay. And we now have 2 down days in a row. 3. Excellent. 4. Should then hopefully be on its way. And then 5. That we don't know yet. Okay. 4. And that should be maybe 5. So then, to be honest, we label it as A1, B2, C3, because we haven't seen 5 waves up yet, so we don't know. Okay, this A wave / 1 wave was made up of 5 smaller waves as well, because we had some down days. This is wave 1, there. This is wave 2, because we had a down day. On closing prices, that is what matters. We would then see this nice little 5 waves up, 4. And then, of course, we'll move this one a little bit higher so it's legible. That is then 5, okay? Simply based on closing prices. Down days are the corrective waves, 2 and 4, and everything else is just part of impulse. This looks like a nice leading diagonal. Picture perfect, okay? So this is A1, B2, C3. Excellent. Now, if we're going to get overlap with this A1 here at this level, that's 39,250. It cannot be 39,250. It cannot be 4 waves up anymore because 4 and first waves are not allowed to overlap, right? Where do 4 waves normally tend to bottom? At around 38.2% retrace. So we have this nice little box here for this wave 4. If we hold in this box, we can get 5 waves higher. Okay. If we get 5 waves higher, how high is then this 5th wave going to go? Well, we have, of course, relationships, something like this. Okay. This is where the 5th wave is going to go. If we're going to get a 5th wave, because 5 equals 1, if we're going to 5th wave, doesn't have to be equal to 1, but that's the standard assumption. Then we have a B wave, which will often retrace somewhere around 50%. So then we know the B wave is going to bottom here. This is the classic B wave, okay? Because this is the retrace between 38.2 and 62%. This is where the B wave is going to bottom. Okay, if we get 5 waves up, we don't know yet. So this is the known unknown, right? So now we're going to zoom in more and more, right? We just assessed this big month-long correction as 3 waves up. And then we looked at this multi-week rally and assessed it as so far only 3 waves up. Okay, if it's going to turn into 5, we know this A, B, C pattern of this larger B wave is going to be a zigzag because it's going to be 5, 3, 5. Because it's 5 waves higher, if we're going to get them, it cannot be a flat anymore. And we have a loud and clear cutoff at 39250. We break below it from current levels, we will get something else, and there we can fill that one in. For now, we're going to look here at this zigzag. So then, if we're going to get the zigzag, right, this is the known unknown. We don't know yet, we're going to get a zigzag. That's fine. We then do a nice Fibonacci relationship for wave C. Okay. In a zigzag, wave C can be anywhere between C is A and extent. Okay. We already have wave C labeled there. That's fine. So that's going to be wave C. C wave, depending on where the B wave will bottom, I just assume here at 50%. Right? It's nice standard classic, who knows, can be 38.2%, can be 61.8, but let's assume just here the standard one, and then this is where the C wave should go to complete the B wave. So you can see we can target anywhere between 55 and 64,000. Now, if this is going to be a flat, where we then get the C wave, C is 5 waves for cycle 4, then I expect the higher end to be reached because the B wave needs to go a lot higher than 62% retrace, okay? It needs to go a lot higher. And then the C wave is 5 waves, and that will then complete cycle 4. So, zooming in, we have now more information available to us in knowing what will happen if then. Okay, if we can hold in this target zone, right? And we can break out, reach about 47,000. Ideally, then we have 5 waves higher. We must see a zigzag, which will bring us somewhere into March, April for this C wave. We're going to get a big C wave. What happens if we don't get the zigzag, right? What if we only get 3 waves higher? Okay, not too bad. Then we know this whole B wave is going to turn into a flat. Okay, so we have a large fourth wave flat, and within that fourth wave flat, we have a flat B wave. So this is the variability of B waves. Okay, that's fine. We know it. Below 39250, this B wave should then become a flat by itself, and it can make a new low or stall somewhere around here. Okay, just like we saw this flat here, A, B, C, we can have something similar for this A, B, right, C. Very, very easy. Then we know this B wave is going to go here. Well, then we're going to say, how high are we going to go for the C wave to get there? Okay, now let's assume we're just going to bottom here. You see, if we bottom here, so let's say we're just going to bottom somewhere here on average, right? So we just say, okay, this seems good support based on general price levels. You can see here, we're already going to go to 56,000 for a simple C is 161.8. That would make then for what we call a expanded flat, where the C wave is much longer than the A wave. Very common. You can have expanded flats where the C wave is 261.8 times the length of wave A. Okay, it is very, very common for it to happen. Let's say it's not uncommon for it to happen. So then we have, if I simply add 100% to 261.8%, something like this. So it can easily get there, you see. Of course, I don't know yet, there's way too little information, but just to show you, we can fill in the blanks quite nicely with standard patterns, with standard Fibonacci extensions that all kind of point towards the same. Regardless if we're going to get 3 waves up or 5 waves up, it doesn't really matter where this B wave bottoms, right? We can still have a very extended C wave and target where we need to target for this B wave. Again, the market knows where it was, and the market knows where it is, and it knows where it wants to go. It wants to fulfill this dream of this higher 3 waves. Okay, can it turn into a triangle? Yes. Not my preferred point of view. They're not so common. As you can see here, flat here is common, zigzags are common. Okay, and ending diagonals and leading diagonals are common. In the crypto world, triangles, not so much. So we focus on what's common. We focus on what we know, that is zigzags and flats, and then we can make the proper assessments. So very simple. We now know we cannot go below 39250. If we do, then we have the flat. Okay, that's what it is. We cannot go below it to keep, of course, the zigzag available to us. That's the 2 patterns we're going to look for. We either get the zigzag and we reach the target zone, or we're going to get the flat. So even if we drop back to about 32,000, we can still reach new highs in this uptrend for this B wave easily, right? Easily. And so far, all of it makes perfectly sense. So now the market can decide shorter term if it wants to do 5 waves up or not. That we don't know. I don't know. But I do know that if we break below this level, then I'm going to look for this B wave to go here. And if we don't break below this level, we hold in this target zone box, we rally a little bit higher, then we should see this pattern emerge. So that is that pattern. Let me do that in red for you. Then we have a nice distinction, and we should bottom somewhere here. And we should probably target, I would say, something like this in red. Okay, so that should then be wave C. Excellent, high enough. If we do drop below 39250, then the B wave is going to go a little bit lower. Okay, and we should target it somewhere here. And I'm going to do that here in a black dotted line. And then we can still rally as high as here. Okay, this is a little too low. Again, you can see nice overlap. And that will then be wave C for all of B. We don't know it just yet. That we don't know, right? But these are the projections you can make with pretty good certainty. So that brings me to a half hour of talking. So I have talked enough to say we now know the parameters to look for. we now know where to look for a potential 5 waves higher for wave A versus a potential 3 waves higher for wave A. We also know that this B wave should last a little bit longer than we currently experienced, because primary waves tend to take months and not weeks. If we add 3 months to 3 months and then the C wave, again, 2 months, we have almost a year long, and that would be a cycle 4. All these things line up and match perfectly well together. So that is really, I think, the fantastic tool that we have available to us. We don't know exactly where this B wave is going to go. We don't know where this A wave is going to go. We don't know where this B wave is going to go. So those are the known unknowns, but we do know they need to materialize one way or another. Okay, one way or another, I need to see them, and that's what we're anticipating. Now, how exactly these paths are going to be filled in, that I don't know. So that's what we're going to monitor. That's why we have these if-then scenarios. Beautiful, picture perfect. And that's really all there is to it in how you can use unknowns to know where things are going to go. And this is how you can assess charts pretty well. This is where you go back in time, you do a blank slate and say, okay, why is the correction complete? This initiation wave, right? The first wave. Why is it complete? Because we have all these indications on the charts that tell us the technical indicators have gone higher. The bounce rally so far is much higher than what we've seen before. All those good things. Then we're going to look at how long did the previous correction last? Months, right? That's the time frame. So then this should also last months because we're talking about the same degree. Add them all up, then we're looking at almost a year plus correction, which also matches with the previous degree correction. Then we're going to zoom in, all right? And we filled in also, of course, that we had 5 waves slower for a C wave that adhered nicely to a rather classic Fibonacci extension, 0.764, almost to the cent. And then we're going to look for how is this bounce going to fill itself in. We must see at the minimum a bounce. That's what we must see. Is it going to be 5 waves or 3 waves? If it's going to be 5, we then know where the correction in this larger bounce, the B wave of the B wave, is going to potentially bottom, which is around 40,000. If we only get 3 waves, we know where this B wave of the B wave is going to bottom, probably around 35,000, plus or minus a little bit. And then we can get a very extended C wave and even a regular extended C wave for the zigzag pattern is possible. So this B wave is 3 waves, so either a zigzag or flat. Zigzag is red, flat is black. And there you have it. I am able to assess reasonably well, with reasonable high confidence, where things should go over the next couple of days, right? Wave 5 versus wave B, the next couple of weeks, and the next couple of months, based on prior assessment of the charts. So with that, I think we have a very good roadmap ahead of us. We have a very good idea of what to expect. We're not living in uncertainty. We're living in rather certain worlds where things need to adhere to certain patterns. And I can't ask for anything more than this. This is, I think, as beautiful as it gets with having such certainties, but still uncertainties as well. But you know what's going to happen if we get this, then you get that. And with that, thank you so much for listening. Thank you so much for being a valued premium member. I really hope you enjoyed watching this, seeing how you can develop paths forward. And yes, these paths are different. Nothing is set in stone. If more information becomes available, the market will decide what to do with it, and we are ready. We have our paths on the table, and one of these will be chosen with, of course, intraday, daily variations in between. The devil is in the details, because that we don't too much concerned about. We're just going to simply follow these paths. So thank you so much for listening. Thank you so much for attending. I'll see you all on Monday, and then we can go ahead and crack the charts in detail for all the other cryptocurrencies. Take care, trade safe, all the best.